Like, why would you want to invest in equities? Why are people buying this market?
So they're the two hope things, which once again, if you are, a long-term investor with a process, you can't form an investment thesis on hope. But those would be, you get a trade deal and somehow the economic growth comes roaring back, and we believe that you might get a trade deal, but the probability of economic growth roaring back is not going to happen. Mm-hmm. And then the other is the Fed has done enough or is willing to do enough, and it's going to work. Mm-hmm. And that'll solve all the problems. So those are the two hope things. Those just create volatility. Okay. So if you want a more fundamental reason, the first one is it's just a search for yield. It's a yield play. And so you look at the U.S. stock market, and you see a dividend yield of 2%. You say, well, that's not much. But if you're a foreign investor, if you're in Europe and you have negative interest rates, you think, oh, I can get 2% dividend yield. That's beautiful. So that's the first thing. And then dividends are just part of, after you have your earnings and you do whatever you do and you get to return capital to shareholders. Right. If you look at the earnings yield on the S&P 500, which is how much do I get in earnings for every dollar I invest? That's upwards of 5%. So now, that's a juicy yield. Mm-hmm. So you start to see how global central banks bringing interest rates down to zero and the U.S. having relatively higher interest rates, how it can force everybody outside of the U.S. to look at the S&P 500 as just, wow, that is an attractive, safe yield. That's sort of the most compelling fundamental reason. Is just the yield grab. You look at the earnings yield and you feel okay. And then more near term, you've seen is you've actually had outflows out of equity funds all year, and you still have investors still in aggregate have a decent amount of cash. So you kind of view that as a lot of folks may be offsides here, coming into year end. Right. They're trying to beat a benchmark, trying to show a great number to their clients by the end of the year, whatever the case may be. They lose track of the long-term game and just say, hey, I got to chase this. I really have no...
FOMO.
That's exactly what it is. That's pure FOMO and chasing. There's a near-term positioning aspect to it when people just start to chase.
How does that usually work out for people?
Yeah. But what would need to change for us to change our stance and just go out and start adding significantly to just broad U.S. equities? Like what types of things would need to happen?
First thing that comes to mind would be a 20 to 40% correction in the stock market.
All these fundamental things we're talking about, you care less about them if stocks are cheap.
Right.
It's the old adage, you can't fall out of a basement window.